Good afternoon. This is Tom Alexander. It is Sunday, April 28th. It's about 12:45 p.m. in beautiful Charleston, South Carolina. And we have another week in the books. We are coming into the late spring season. We're coming into May. We're, as usual, at an interesting time here. This has already been an interesting year, and I think it gets even more interesting from here. It is an election year. We have a lot of exogenous stuff going on. We have a lot of things that can roil the markets from time to time. And if you're new to this channel, if you're new to Alexander Trading and what I do, I've been doing this for 38 years. I use price action, auction market principles, market profile. I use market profile. I use bar charts, simple things. Okay, and this is what I've been doing for 38 years, and I trade full time. So I think there are going to be numerous opportunities coming up. Let's talk about the week ahead. Now, just from an exogenous perspective, we have Wednesday, Thursday, and Friday. Wednesday, we have Powell's the Fed meeting. We have Powell's press conference at 2:30 p.m. Eastern time on Wednesday. That can be a market moving event. Then we have employment numbers, jobless claims Thursday and Friday. So I'm not sure what's going to happen on Monday and Tuesday news-wise, but I trade price action, and regardless of any opinion or narrative I have, I let price dictate what I do. I let price dictate targets. I let price put me into trades and take me out of trades, and I strongly suggest that you consider that. Okay, let's take a look at some charts here. By the way, I do this every single week, and I also send out occasional free reports. If you are on my list, you're getting those reports. They're free. I don't sell lists, but if you want to get on my list to receive stuff when I send it out, shoot me an email to tom@alexandertrading.com and just say, please put me on the list. I'll put you on the list. Also, you can go to my website, alexandertrading.com. You can see all the past weekly reports I've done. You can pick up a PDF of the report if you like, with the charts and the levels that I discuss on it. And you can go back and you can look through previous weeks and see if you think you might find value in my work going forward. Okay, let's take a look here. Now, what you see here, these are the four primary U.S. trading indices. These are the cash markets. And I'm showing this for you. I'm going to break it down in just a minute. We'll go through each one. But it's important to note there's some little subtle differences right now in the price structure of the market. And that, that's something you always want to make note of. Is something that I'm always cognizant of, because when markets are moving on an intermediate to long-term basis, they pretty much move in lockstep. And when they are not moving in lockstep, it's a heads up. Something has to change. They have to get in lockstep, or you may be near some sort of pivot turn. So the market's bottomed about a week ago. And, coming in this time last week, if you're reading Twitter, it was the end of the world, and it was the top of the latest and greatest grand Armageddon super cycle, wave 55555 to nth degree, and it was going to zero. Well, that didn't happen. So what we did have was a very strong rally. We had a little bit of a test, which was an interesting situation on Thursday. So now let's just take them one by one. Okay, let's look at the SPX. The SPX is rallying. Now it's in what I refer to as an elevator shaft. Of the day of the 15th was straight down. So there's nothing on the horizontal scale here that would suggest any sort of potential resistance from a market-based price action market-based perspective until we get to 5165, 5183. Now, what does that mean? Does that mean we go straight there? No, it doesn't mean we go straight there. Friday could have been a short-term top. I don't know. We have this gap from Thursday's close into Friday's low, and so that's a potential target. Also, back to the downside. So we're in the middle of nowhere here. I'm just saying that we're not at an obvious level from where you might think this market would stop. if we were to now ramp up into this area, I would expect some sort of pushback from this area before we just go plowing through it. So that's what the SPX looks like. Let's look at the NDX. The NDX now is a little bit interesting because it is actually at a level where there is some price action that could be resistance. Now the SPX, the NDX, you're not going to have one move very far away from the other for obvious reasons. You also have this gap to the downside created in Friday's gap up to keep an eye on. And then, more importantly at the moment, you have the Dow and the Russell, neither of which took out the highs of the middle of the week. And so those are levels that if the market is going higher, if the SPX is going to trade into this 51, what is it, 65, 51.83 area, I don't see how that's going to happen unless the Dow takes out last Wednesday's high and the Russell takes out last Tuesday's high. So this is a heads up. This is a situation that has to change, and it will change. Now, it could be portending that we're going to have early in the week this gap close. We're sort of in the middle of nowhere. The really important levels now are the recent highs and then the low from Friday week ago. So those are your intermediate term levels. What happens here short term is going to be determined likely by market participants' reaction to stuff that goes on during the week, in particular beginning on Wednesday with the Fed announcement and Powell's press conference. So that's what we'll be watching very closely. The benefit, I'm giving the benefit of the doubt to this market in the intermediate term to the upside. However, if we were to close below these lows, it could be very negative and it could be extremely negative immediately. So that's a level to keep an eye on. Okay, let's take a look at the technical situation. Now, this is what last weekend, if you go back and you can go to the website, go to weekly update, and you'll hear me and you'll see me put in writing the importance of this low and the fact that the 5-day moving average had reached an extreme that we had seen very rarely over the past couple of years. And even in bear markets, you often generated strong rallies, and indeed that happened. So this is sort of a reset. We could be on our way to new all-time highs in one or more of the indices. It would likely be the NDX SPX, if not the others of the Dow. The Russell is a long way from its all-time high. I don't know if we'll see that, but it could make a new yearly high. So we'll see. But this was giving us a great tell, at a minimum, not to be pressing the downside when everybody was ready to jump off the cliff about a week ago. So another view of this is something we use in the live trade room regularly, and that is, this is a 30-minute cash chart. It's the SPX, S&P 500. This is breadth underneath. Now, I sent out a bulletin to everyone, and if you're on my list, you got it. This is another reason to get on the list, because I send stuff like this out. But right in here, I sent out a real quick report saying, this is potentially very bullish, because we were trading negative 2,000 breadth, and we traded down and held below negative 2,000 for a couple of hours. So we were either going to almost crash through or through these lows, where we were going to mount a strong rally. And I said there I was cautiously bullish. So that turned out to be a good trade. This is information. I use very simple things. I use price action. I use levels generated by the market itself. And then I use market internals, which is market generated information. So that was a very helpful turn of events. Now, this is information that cannot be rote traded. This price breadth stuff, I want to warn you against trying to do that. It has to be put into context. It's nuanced, etc. There is no holy grail. This is certainly not the holy grail, but it is something that, if properly used in a context, can at times be extraordinarily helpful. So next week should be fun, should be interesting, aren't they all? You guys have a wonderful remainder of your weekend, and I will speak with you soon.